note, because we're going to be joined in corporate conversation. We have Rajat Rastogi with us, CEO West and Commercial Assets at Puravankara. Welcome. Good afternoon, Rajat. I want to first start off with that big win that you've had. Yes, that big win that you've had in Mumbai, 2100 crore GDV potential project. Talk to us a little bit about that. It's a large win in relative terms for you. How quickly do you execute this and how quickly do approvals come in place, more importantly?
Good afternoon to all of you, and thank you so much for having me on your show. So yes, it is indeed a big win for us with a GDV value of almost 2100 crores. I think the total cost of the project is approximately 1600 odd crores, and we intend to launch this project in a period of around 9 to 12 months from today. Chembur is indeed an important market for us. We already have a project in Chembur wherein we are obviously one of the best products available in the market, and this product in Deonar Bagh adds to the portfolio over there.
In 9 to 12 months, Rajat, how quickly do you estimate completion in another maybe 2.5 years thereafter?
Yeah, no, I think the completion takes time. It's a large project. It's maybe 1.2 million square feet that we're developing over there. The overall timelines is going to be between 48 to 54 months.
Got it. And does the sale also happen in staggered fashion? So your 2100 crore of GDV realization is likely going to happen in staggered fashion. Just give us context on how it will happen over maybe, because it's a large period of time. Just give us that broad level understanding. Roughly 500 crores a year?
Yeah, exactly. I think that you're right. So it's going to be around 500 crores in a year. And as I said, Chembur is performing very, very well as a market. And I told you that our project itself is one of the top leaders in that micro market. So we see the sales happening directly from day of start of the project. And depending upon the market demand and how the pricing moves, we look at least selling of most of the inventory in a period of at least 3.5 to 4 years.
100 crore out of the way, Rajat. What next? What's the FY26 pipeline looking like in terms of new development that you're looking at in terms of GDV? Just give us a number broadly.
So this year looks very, very positive for us. And we've obviously started in a very positive way with securing this right. Just to give you a perspective about what we're doing in our West region portfolio, we today have a GDP value of already crossing 18,000 crores in the West market. We have a portfolio of close to 14 million odd square feet between Bombay and Pune, where we are predominantly present in the West. And bulk of this is a substantial portion of it is also on the redevelopment portfolio, which contributes around 7,500 or approximately of the overall GDP value. So we have a very, very strong pipeline for the balance of the year. We as a company strategy, we are focusing only on strategic marquee assets, and that's where the company's focus is going to be. And we're going to be focusing primarily on all the three segments, which is land buys, JDAs, and also in redevelopment. So our strategy is very much aligned, and I think, as I said, that the year looks very, very positive for us.
This one has roughly a 20% margin. Do pretty much all your projects have that kind of number under the JDA model as well? Do you have that kind of number?
Yeah. So we have established margins for us internally, which we follow with regards to every asset class and every product type that we do. But yes, one of the key focus areas for the company is on the healthy margin side, and that's really enabling it. So yes, to answer it, most of the projects have better, equal. I mean, depending on the product life cycle of the product, we decide on that. But it's all about in the near range of what you spoke.
Is there a preference as to which model you prefer within the three?
No, frankly, we're agnostic. We're looking at market opportunities. We're not stuck on any particular model, but I'm very, very glad to share with you that we are doing a lot of marquee redevelopments in Mumbai. We are doing a lot of developments in Pune as well, not on the JDS or on the redevelopment side, but normal development that we are doing. So we kind of, as a strategy, as I said, that it's more to depend upon what product and where do we create and where it lies in the overall strategy of the company is what we acquire. But right now, as I said, that redevelopment, yes, Breach Candy, Andheri Lokhandwala, Pali Hill, and now this one, I think adds a strong portfolio for us.
Now, Rajat, you've done a top line of around 2,000 crore last year. So as the focus shifts towards execution, you have a large pipeline, of course. As it shifts towards execution, how is that playing out? What's the FY26 execution guidance looking like?
No, I think as a company, we are obviously very much focused on our execution capabilities. We obviously are delivering our required numbers of inventory in terms of position across all the markets, especially in Bombay and Pune. So execution is going to be key for our success in primarily in the West region is what I can speak. And also, I think on the overall numbers side, our execution in terms of the burn rate that we speak about, we are going to be growing a burn rate by at least 2x in the West region in this financial year.
And what's the thought process with regard to balance sheet borrowing that you have, Rajat? Is there a plan to repay that? Are you in a first off, are you in a position to answer that? And if so, can you give us the kind of thought process with regard to repayment of debt?
So I'll give you a broad semantics on this. Our borrowing levels are very much in the established limit that we have defined for ourselves. Bulk of the investment that we have done in last couple of years has gone for acquiring huge land parcels across various centers that we where to operate from, and much of this debt is going to get reduced in the coming years, in the coming period, over from the sales that is going to happen from these projects. So we are very much comfortable with the debt positions. We don't see any pressure on that, but we are very hopeful that once these projects, 7-8 of them, get launched over a period of time, our debt position will fall further substantially.
Okay. Rajat, any guidance that you can give us on the top line number for FY26, or that won't be possible?
That won't be possible. We are obviously looking, the first quarter just ended and the first quarter has gone well for us, is what I can say. Sure. We have a very strong pipeline for the launches in the quarter 3 and quarter 4, where the bulk of the sales is happening. And we're definitely looking at a very strong financial year in terms of the top line this year.
Did you execute your entire GDV, if not for the entire company, even for the West Zone, if you can give us that perspective?
Sorry, can you please pardon the question?
How quickly do you execute the entire GDV that you currently sit on, Rajat?
So our current GDV is going to be executed over a period of between 4.5 to 5 years. Some of these projects are really large-scale projects, especially the one that we're doing in Thane, for example, is a 3.2 million square feet project that we're doing in Thane. Couple of them are projects which are really marking in terms of the areas that we're doing in Pali Hill, which have to be done in a period of around 4 years, 4.5 years. So from an overall perspective, you're saying my entire 18,000 crores worth of inventory should be executed in a period of around 4.5 to 5 years.
And Rajat, what's the internal IRR metric that you all look for when you all pick up projects?
Yeah, we have established numbers that we have. We have a committee which approves our investment positions that we do in various assets. And from the IRR perspective, we are comfortable in anything which is upwards of between 20 to 25% is where I think we look at assets. Of course, depends upon which life cycle, which strategy, which micro market that we're entering into. That is what we look into. But overall, I think our internal guidelines are something that we keep in mind before acquiring any project.
And on the commercial side of things, how are things moving along, and what's the growth and the project pipeline like?
Brilliant. I think the commercial portfolio is doing very well.
Sure.
This year we're looking at delivering close to 2 million square feet of commercial projects. We are currently focused on Bangalore right now, where we have 2 projects and we'll be starting the 3rd project very soon. We're obviously looking at strategic growth paths in other CBD areas of Mumbai and Pune, and that's where I think we are looking at more acquisitions. But the market overall is doing very well, and we are very buoyant about this portfolio. I think from what we have also spoken about in our investor deck is the fact that by 2030 we're looking at least 400 crores from our current inventory to come as annuity rental income.
Okay. Rajat, if I were to push you to give us a guidance with regard to how quickly does debt come down, or what's the target debt number that you have over the medium term, what would that number be?
So we have our internal target, which we're going to subsequently speak about in our quarterly results that will be announced very soon. Sure. We're going to give you a detail. But what I can assure you is the fact that our launch pipeline is very strong this year. And because of the collections that we're going to get from the sales, our debt numbers are going to be going down reasonably this year.
Okay. All right. Rajat, thank you so much for joining us. We'll let you go on that note. Thanks so much for coming in, speaking with us.
Thank you so much for having me online. Thank you.
Yeah, no, completely our pleasure.